Good morning. Going to do a quick trade review that I took this morning. I actually took two. One was a winner, loser, one was a winner. So as you can see here, I took both of them as sales. That's the red arrows going down, and then closed out both of them. So the first one I took here at around 450 for a sell, and the second one I took around 540 for a sell. The first one I closed out at 530 because price just chopped. It didn't go anywhere. And I said I'd wait for movement. And when I saw a movement at 540, I took the trade and it hit my TP at 545. So that was a quick 5-minute trade. Now, why did I take sells? Because price consolidated until around 310, broke out of the consolidation, closed above the highs, went and took out Asia high, closed above Asia high, and it continued up until it hit internal liquidity to the left. And then it started to pull back and turn around. And I knew it was a reversal when it took out the low. Here's the low of that candle. That's the low that pushed this candle up to take out these highs. So once it closed lower than that, I said, okay, this is a legitimate reversal, and it made a fair value gap to the downside. So I said, when it retrace into this imbalance to balance the bearish fair value gap, I will take a trade lower because it would want to come down to these lows, these equal lows here, deliver price there, and take liquidity that's sitting under those lows. So that's what I did here. But price just chopped around. So I came out and I said, I'll wait for price to move in a direction that it's indicating it wants to go. And when it did this move, I started to watch. So as you can see, first trade, let's look at my account history for the day. First trade, 717, 530, I lost $25. Second trade, 549, 717, I made $112.50. So that's the legitimate trades there. So let's, like I said, what made me, let me move the arrows out of the way so I can explain the reasoning behind the trade. When I did enter the trade, this candle at 535 moved away from the consolidation and closed lower. So it had space between this candle low and this candle close. So I said on the next candle, when it opens, if it spends the first 2.5 minutes moving up, that means it wants to close the space up that would have been a fair value gap because it does not want to come back to rebalance. This is the space that I'm talking about. This candle low to this candle close. I said if this candle opens up and spends the first 2.5 minutes going up to close up this space and not create a fair value gap, as soon as it hits this candle wick, I'm going in for a sell, lower prices. And as you can see, my entry was on this candle, which is the one that traded up, closed up that space. As soon as it went there, I hit the sell, and my target was this dotted line, which are these equal lows. Price like to take out equal lows and equal highs because retail traders see that as support. So they're saying, oh, price is not going to go below that. And if it does, it'll continue lower. Price can go below that. Take your little stop loss you have there because you say that's support. And it can turn around. So that's what it did. And that's why I took that sell trade. That's why. Like I said, I should have stayed in up here, but it was just going sideways and it was too much for me. I would have made even more money because I got in earlier up here, which is to retrace into this imbalance after it took out the low that break the Asia high, close lower. Retrace means lower prices. So yeah, that was a quick one too. And I just wanted to review that trade with you guys because you could just sit here and I was watching price from 2 o'clock this morning. 90% of trading is waiting, but you got to see the setup. You have to see when the trade is easy, and then you just get in and make your move. So that's what happened there this morning. I just wanted to share that with you guys so you could see the trade I took and the reason behind it. If you want to make notes, etc. Okay, have a great day.